The rise in headline inflation from 3.6 to 3.8% was both expected by the market and forecast by the Reserve Bank, so no surprise there. The surprise was in the trimmed mean. That's where they lop off the biggest 15% of price rises and the smallest 15% and average the middle 70%. And that's the number that the RBA prefers. Now, that number fell from 4 to 3.9%, which everyone got wrong. The RBA had expected 3.8% and the market 4%. The people who bet on these things were putting 25% odds on a rate hike at the August meeting next week. But they now think there's no chance of a rate hike at all, while the chance of a rate cut in February went from 25% to 100%, which is why the Aussie dollar lurched downwards at 11:30 when the CPI release hit the screens and is currently trading at a three-month low of 64.9 US cents. The local share market jumped at the opening and then jumped again at 11:30 when the June quarter CPI came out and closed 1.8% higher, with especially big gains by retailers. Now, the grocery inflation rate has fallen from 10% to 2.7%, well within the Reserve Bank's 2 to 3% target band. But what you might call life admin inflation, which includes rent, rates, utilities, childcare, public transport, insurance and fuel, is still well above target at 6%. Microsoft released its quarterly earnings last night, posting a rise of 29%, which is not shabby at all. But the market had expected 31%, so the price was promptly slashed 8% before recovering a bit later. But that shows how tense things are with US tech stocks at the moment. Nvidia fell 7% last night, but Chinese markets rose today. And that's finance.